Welcome everyone to our webcast today. I'm Bryan DeGraw with the Hackett Group. Been with Hackett for 20 years. I am a lead analyst in our market intelligence practice and focus very specifically on software and services that are enabling CFOs, finance leaders, and I'm joined today with Consarc, with Kaushik from Consarc.ai. We're going to be talking about the 2025 technology roadmap and digging into how software and specifically AI empowered software is going to reshape and reimagine the account to report process. Kaushik, anything you'd like to say before we dig into the details?
Yeah, sure. Hi, Brian. Thanks for that. Hi, this is Kaushik here. I head products at Consarc. I'm an accountant by profession, started my career with the Big Fours and had almost more than a couple of decades worth of experience helping companies streamline their account to report process. The last couple of years, been focusing more on exactly like what Brian said, how technology and AI can streamline the account to report process. So, and that bug has bit us, and we're kind of on that journey trying to make lives easier for finance teams as a whole. Yeah.
So I'll start us off with what is on everyone's mind right now, and I think everyone is overwhelmed with thoughts of what does this new world look like in terms of technology. Hackett describes it as intelligent automation, and it's becoming a toolbox. It's not a one tool that's going to solve everything. So when we do groups together and ask, what are their thoughts? What are they thinking about? And you can see this is just a small piece of what could easily fill the page with what everyone's thinking about, how to leverage these technologies, how we're using them personally, how we're using them internally within our organizations, and then, equally important, how are we interacting externally with customers, suppliers, partners in the market. There's a whole host of tools, and some of what we're going to do today is kind of break them down in terms of where is the best place to leverage a tool, and most importantly, when we think about technology and software for the account to report process, where are we expecting to see the biggest opportunities?
Yeah, true. And just to add on to that, Brian, especially after Satya Nadella of Microsoft was talking about how AI could play a disruptive role with the agent model, I think that's also something which is on the horizon for the finance teams to kind of move into a very conversational experience with applications. So that adds on top of what you're saying already in terms of existing tools available in the market. So yeah, exciting times ahead. And yeah, really excited to see what's up ahead for all of us.
So if you were to ask AI, one of your assistants that you have today, show me a picture of what it means to have to do more with less. I'm hoping that it would bring up this Hackett slide. So this is information from our latest key issue study where we asked leaders in finance for an expectation around their business for the year. Do they expect business to grow? And the answer is yes. They're seeing a 3.5% expectation of growing the business from a revenue perspective. They also expect that the workload from the finance team to support that is going to grow as well. So you've got the equation of we're growing, we're going to have to do more. And here's where it comes with the caveat of, but do that with the same or less. There's no expectation that staffs are going to grow or the budget to support the work is going to grow. So there's a gap in there. Obviously, you can see a 4.9% productivity gap and an efficiency gap from a finance operating budget perspective. The one silver lining here is that there's a strong expectation, and for some who are CFOs who are supporting and approving budgets, there is a strong expectation that technology spend will continue. So the gap is going to be filled with new platform software. And again, that could be implementations that are in flight, as well as RFIs and RFPs that have been approved to move forward. So there's a strong expectation and obviously a strong need for software in the space. And again, one of those areas is certainly the account to report space and process.
True. I mean, it's quite a startling fact in terms of how disruptive technology is going to be in terms of efforts. One thing that as finance professionals, we've been grappling with both internally as well as with quite a few of our customers is what should the mindset of the professionals be, right, in this domain, and how should we kind of approach this? So I think it's pretty clear that technology is going to kind of become very critical. So understanding tech stacks, understanding applications in terms of use case is going to be pivotal for finance professionals. So from an employment standpoint or from an opportunity standpoint, I think we as finance professionals probably need to look at how we can embrace this and use this as a leverage in order to be able to jump to jump up the value chain significantly. So that's pretty much what struck my mind when I saw these stats and graphs in front of me, Bryan. Yeah.
Yeah, very true. So another cornerstone slide and findings that we produced from our key issues is the top 10 finance program initiatives. Um, I'm not going to go through every single one of them, but I'm going to call out some very important ones. In order to achieve the support needed, again, finance is looked at today as a business partner, a catalyst to growth for enterprises and organizations. So how are they going to fulfill that? So initiatives. Some of these you've heard before. Maybe the words are a little different, but it's foundational and so important. To be able to simplify, standardize, and automate transactional processes is monumental. So that's going to be a cornerstone. Some organizations may say, "Oh, we tackled that 2 years ago, 3 years ago." But I think it's a constant area to continue to focus on as processes evolve, as how we do business, both with internal activities and with our customer suppliers evolve. That's going to be core. The second one, equally important, is if we have stable, timely, accurate transactional processes, now we need to be able to harvest that information that's coming from that so we can get smarter in terms of how we do business. So analytics, modeling, reporting capabilities, super strong and a necessary one to be focused on. So harvesting and intelligent automation technologies is going to be foundational. Number 8. You can see number 7 is putting together a strategy and approach to implementing Gen AI. So everyone has that on, we're going to talk a lot about Gen AI today, but it's on everyone's radar to say, okay, how exactly does this fit in here? And finance is saying we have to have a specific initiative around here. And again, 2 other items I want to mention is number 6 and number 10. Number 6 is critical because it's going to be the fuel to power the business, both from an operation perspective, as well as to make these investments in technology. So working capital is a very strong focus for organizations. The easiest and most available source of cash for an organization is their own working capital. And then again, to really bring this together, both from timely transactions, insightful and accurate forecasting and analytics, is going to be number 10 around master data management, improving the data processes, the models. That's going to be critical, especially when we talk more about the opportunities of AI. Both predictive and generative AI really needs to have stable data. And of course, Gen AI needs a lot of it. So having stable governance processes around data and data management processes are going to be super critical for organizations.
Yeah, and it's at this time that I just thought we'll run a simple poll, Bryan, right? Given the kind of use cases that you've articulated on how disruptive technology can be, I'm just launching a poll as we speak. A very simple question in terms of from an account to report or a finance close perspective, whilst these use cases have been articulated, what is the real pain point that we are looking to solve for, right? In this process. So and any of these use cases could kind of start playing a role. Even on point number 10 that you said, Bryan, right, on improve and expand master data management. I mean, it sounds like as though it's a very standalone, siloed, modular kind of a problem statement, but the pervasive impact it has, right, from accounting to reporting, for including regulatory compliances, I think it's immense, and it kind of lends itself into the overall process and how organizations are governing their reporting process, their monitoring process, etc. So in that context is why we kind of quickly just launched this poll. I'll end it now just to move ahead the next slides, but it's really interesting insights that we've been getting what exactly are we trying to solve for in the account to report space?
And you force everyone to pick one. But some people have said, yes, all four, please. This is a way we like to really illustrate predictive AI and Gen AI using the left brain, right brain that we often talk about being analytical and being creative. So it's a very helpful illustration for a lot of people to get comfortable with the concept. Um, so when we talk about AI in general, over the past year at least, organizations have been getting educated on exactly what is AI and particularly what is Gen AI. And for some, they've been surprised to find out that they've been using AI already in some of the platforms that they have in place, software. And that's really the left brain. It's the predictive AI. So many organizations have applications and are using tools that are doing machine learning. They're doing predictive analytics. And again, when you look at what it's doing, it's looking at algorithms. It's doing decision making based on structured data. Generative AI, the key aspect there is it excels around unstructured data, and it is actually creating something new for you that's insightful, helpful, and most important, it's doing it at a pace and with a volume of data that far exceeds what we could do as humans. So think about, in predictive AI, I would provide a spreadsheet of information that I've already put together, structured data, and I'm asking it to, do some predictions, do some, and again, in simple terms, think about the macros we've created in Excel that outputs and answers. Now think about that same concept, but your data is in 5 different Excel spreadsheets. It's also information you've gathered from surveys. So it's sitting in a database somewhere. And you've also exchanged maybe 100 emails with the group that you're working with. And you want all that analyzed and broken down and summarized for you. That is a perfect example of what Gen AI can do. It can take that disparate information that has related information in it and quickly summarize it for you. So again, being creative, being generative in terms of something new. And again, it has the power to be unsupervised and learn. And again, the power there is it's going to learn from the data it's ingesting. So the more data you have and the cleaner your data is going to be really important to get great information out of a generative AI platform.
True. I mean, just to kind of make this pointed in terms of use cases in the account to report space, right, Bryan? So on the predictive side, I would probably put something like transaction matching more on the predictive side to kind of look at patterns and see how the application can suggest more matches between multiple data sets. Whether it's intercompany reconciliation or bank reconciliation. A lot of these transactions have matured and pretty standard. So, we can kind of look at patterns and improve the matches and significantly reduce time. And from a generative AI standpoint, a classic use case that comes through is for variance analysis, where the model can read trends and kind of generate explanations, which can be supervised or reviewed from a human intervention perspective. But that's a classic instance which we're working on, where we are generating content using Gen AI, language learning models, by allowing it to read the underlying data itself. So I think those are two clear use cases on the left and right brain, especially in the account report space.
Very much agree. Yes. So what I'm showing here is the level that we're seeing of Gen AI adoption and deployment within finance processes. And obviously, this slide is a focus on Hackett's process that we call general accounting and external reporting. And you can see here that there's opportunity. There's a lot of planning. There's a lot of opportunity here. And again, what I mentioned earlier is organizations are still in that education mode and understanding what the use cases are. What are the opportunities? You can see there's a fair amount, a fifth of the organizations that don't know. They haven't really identified, where they specifically want to try. And then you see there's pockets of planning. There's some piloting going on right now with enterprise consolidation and external reporting. But there's a lot of planning going on right now with intercompany, with fixed assets, cost accounting, and then the close process itself. That's where we're seeing the biggest focus right now and interest of leveraging Gen AI adoption.
True. And purely from a technology standpoint, selfishly speaking, right, what we've noticed is the usual standard problem that all of us grapple with is hallucinations with these models, right? What we've noticed is the probability of getting more accurate results is significantly enhanced if these models sit on top of some business logic applications which run some automation and prepare data in a fashion where the models can kind of read them more accurately, right? So having an AI model sitting on top of an outcome of an application or of an automation routine, right, could significantly enhance results, significantly reduce hallucinations. So companies are also looking at, can AI sit on top of their existing applications rather than, looking at unstructured data as well as a solution just to kind of go faster in terms of use cases as well. So I think that's also kind of things which, customers are experimenting with and looking at it as well. So just want to kind of add from an approach perspective, how people are, looking into this particular application per se.
Okay, so what we're looking at here is where we're predicting that Gen AI is going to grow, kind of ranking it there around a set of tools that we call intelligent automation. So going back to that concept of the toolbox, we're seeing that Gen AI is going to grow, predictive AI is going to grow, conversational assistance. We see that a lot in interactions with customers, suppliers, getting information. We're going to see that more and more used internally as well. Great training, but also, we're going to see these AI agents really being assistants to doing internal work. That's what we're expecting. What we expect to start to fall down in the rank, I think everyone has leveraged RPA. It certainly has its place in the toolbox. Certainly not as powerful as AI tools, but it does have its place. It's obviously, everyone's familiar, very rules-based, has to be very structured, and it doesn't adapt well to change. And right now, and I think for the future, we can almost maybe replace the word change with just evolution and evolving. We're not going to be doing change management. We're going to be doing evolution management in a constant improvement type of environment. And of course, when technology is changing, logins, fields, naming of fields, that's where RPA falls apart. Intelligent data capture, I still think that's going to have a place somewhere in our processes where we've certainly eliminated paper, thank goodness, but we're still interacting with documents that may be attached or uploaded into tools, and we need to extract that data, and that's where that IDC type of technology is going to be helpful.
True. I mean, I can't resonate more with your coining of the term evolution management, Bryan, because the top three items that you're showing here in planned rank, the generative AI, the predictive artificial intelligence, and the conversational assistance. If this presentation or webinar was presented 2 years back, I don't even think some of these models would have found its way into the toolbox as yet, right? So the rate of change is startling. It's extremely fast, and I think we have left breathless to kind of cope with it as well. So that's the startling fact that stared at me when I looked at this the outcome of this survey.
So heat maps and use cases, that is what everyone is looking at now and wanting to understand better. This is a first generation that we've put together looking at the account to report processes. Again, general ledger management, intercompany, fixed assets, cost accounting, external reporting. And initially, where are we seeing the opportunities for these different technologies? And again, as I mentioned, for certain things that are rules-based, part of your monthly close process, RPA still has an application there. But what I'm expecting to see is this map to evolve, similar to the previous slide, is that where predictive and Gen AI is medium, they're going to grow to be high areas. And probably some of the areas that we're currently saying are not applicable, we're going to see those probably shift again into being medium and high across the board for predictive, for agile orchestration, and for Gen AI.
True. And in this context, I just wanted to quickly move to the next slide, because what we've done is, as a result of the study that Bryan and the Hackett has carried out across these domains, we just wanted to quickly come up with a case study which articulates our experience that we've had with one of our customers. So it's a clinical diagnostic chain, and they were on an SAP, ERP, and they obviously had the ERP capture all the underlying transactional data. They were struggling with their close cycle in terms of number of days, in terms of the effort, and that the teams had to kind of put every month to kind of close the numbers and validate them, etc. So some of these tool sets that Bryan just articulated in the previous slide is what we have put it on the right hand side of the presentation, right? So intelligent data capture for a moment, right? When accounting for transactions, how can the process be streamlined using technology to standardize, say, a revenue related activities or billing related activities? How can accounting be automated? How can vendor invoices be captured in a smart fashion using more advanced QR codes and more advanced OCR techniques that are available in the market? So that's something which they started adopting and started seeing huge amount of time and effort being reduced, especially in the AP processing part. As far as the close activities are concerned, whether it's predictive AI or generative AI, how companies have, how that particular company used transaction matching for its intercompany, given that it had many units spread across different geographies. So, kind of looking at intercompany or, transaction matching or automation, critical account reconciliations, which typically was a pain in the neck for them, month in and month out, trying to see how that can be automated in terms of looking at subledger transactions vis-a-vis trial balance related balance level, amounts as well. And obviously, having a very agile orchestration through workflows, which can give visibility to the users in terms of who's carried out a task from a close perspective, who's approved it, and leaving an audit trail in this process so that controllers can look back and use it for retrospect and understand how can the process be more streamlined, how can it be made more efficient, and what are the blockers, if I may say so, in trying to achieve a more faster and more efficient close in itself. So I think those are some of the toolkits that the customer kind of used in to streamline their record to report process. And on the reporting side, interestingly, there are two use cases that they kind of adopted. One was to automate their financial reporting mechanism in itself. That was fairly standard. It used existing tool sets to kind of do that. But more interestingly, they fed that outcome into AI models and started generating variances across their units, across business segments that they had. And that kind of started giving CFOs an almost real-time visibility in terms of looking at least the critical variances. It took them about 8-10 months to reach a state where they could largely rely on that. But initially, at least, it kind of started giving them a lot of insights, which typically used to take a lot of time for them to even to reach a CFO's desk in the first place. So just in line with what Bryan had mentioned in the previous slide, some of these tool sets, which in combination, if used effectively, depending on the problems that a customer is trying to kind of address, I think in combination, if you use some of these tool sets, you do end up getting the kind of results eventually, which is hastening the close process, reducing the number of days in terms of the cycle, the cycle takes, and also ensuring it doesn't come at the cost of reporting qualitative, accurate numbers to stakeholders as well. So that's an interesting, experience that we've had with that particular customer. Some of the solutions were provided by us, some of the solutions were given by other COPE technology providers as well, and the customer beautifully integrated all of this to achieve the end result, which was to ensure that their close cycles could be made more efficient and accurate. And at this time, I just kind of wanted to quickly launch in one more poll, specifically on how much time does your team members spend on the close process each month, right? Because and this is something all of us are grappling with. Some of them could be on day 7 trying to move to day 2, some from day 20 trying to move to day 7. So what's the priority given for this particular aspect as well? I thought it's pertinent given what the case study that you're seeing in front of you, just to kind of understand the sense and sentiments that are going through right now in this regard. So great. Okay, it looks interesting.
Yeah. So
Cool.
hopefully everyone is tracking it. I would think the only reason they might pick that is because they're in constant close mode.
Yeah, the funny joke that one of my one of our customer CFO was like, at the start of the month, We are in the previous month, and at the end of the month, we are in the next month, and then there's just a couple of weeks in between, which allows us to breathe. So,
Yes, I've been there.
yes,
Yes.
cool. Yeah.
So another study that we recently conducted was looking specifically at account to report processes and leaders in this space, and getting an understanding of how they're going to embrace Gen AI. What do they know about it? What is going to be on their roadmap for looking at the future? One of the key findings that came out of this study was that 81%, I mean, gosh, that's a high number of organizations are evaluating and looking at it using traditional ROI techniques. Now, that's going to be something that's going to be pressure tested as well as we look at how we can embrace and leverage new technologies. Some of the old ways of looking at the benefits are going to have to be challenged as well. So, understanding the importance of balancing, how to develop and harness this in an account to report process. So when you think about what we just talked about, reducing the time to close, obviously the big benefit there and the joke that we just made is we're in a constant close process. But really the value of the close process is what happens after, right? The analysis, the findings, the information, the way you can be a business partner to improve. So that's going to be the real tangible that we have to put a number around or a value around of what does it mean to be able to move out of the traditional close process into the analytical work that follows the close process. So I believe the next couple of slides, we're going to dig in and look at some findings of a study that we did, specifically looking at what we're calling pathfinders in this space. So the way we evaluated the data and who's really harnessing and looking to embrace this, we identified those organizations as the pathfinders and then the followers. I mean, you can think of this in traditional, your early adopters, and then your groups that stay on the sidelines and say, let me see what's going to happen here. And again, we broke it down in further detail of the type of activities that are going to be taking place in the account to report process. So faster account reconciliations. Boy, this, probably right up next to the close process is the wonderful world of account reconciliation in terms of I would say, the favorites among accountants. They're seeing that there's going to be a very high percentage of expected productivity gain by leveraging AI and Gen AI infused technology there. They're expecting, obviously, there's going to be reduced effort, which is great. And probably, when you think about lowered costs, the way Hackett looks at time and cost allocation is by different process levels. So it's not necessarily, we're going to see a drastic reduction in headcount because of this, but it's going to be a shift of where the work is focused, more analytical, more value-added information. Of course, we certainly see the expectation around faster close cycle times. And again, maybe a soft benefit. Like I said, we're challenging, how to evaluate the benefits and the return on investment is, satisfaction with employee work. So we're going to be providing tools that are going to make people smarter, be able to do their jobs faster and enjoy them better, which is that's pretty good benefit.
True. I mean, I just want to go back to the slide, just one slide back, Bryan, right? And in line with what you were saying, in terms of what organizations are looking at Gen AI for. So what we are noticing is that organizations are looking at AI, in a good optimal mix with other applications or other, automation or technology routines as well, right? And broadly, they're looking at it from these three buckets, right? As to what is analysis in my closed cycles? What are the tasks which are analysis based, right? Analysis based could be data driven. It could be subjective, depending on depending on human intervention or human opinions. And then what part of my close can be automated where I don't really need a human intervention, and how do I use these two buckets to streamline my process as a whole? Having a workflow to kind of act like a governance layer to ensure that all these tools are doing their jobs and the feedbacks are being given to controllers for them to kind of monitor, so that in case something goes wrong, those flags are brought to the attention, so that due attention can be given to those possible material misstatements. So I think it's a combination of what existing applications can do, and how can that be significantly enhanced with adopting AI routines or AI technologies, right? So I think that's the kind of combination that we're seeing our customers and the CFOs that we are conversing with, what in terms of what they're experimenting and what they're taking forward per se in terms of investments into this whole finance transformation process.
Yeah, so sticking again back to the quick poll that we conducted around Gen AI, and again, just a reminder, pathfinders are organizations that are they've already deployed or they're in pilot mode with Gen AI platforms and technology. So again, higher automation of journal entries. Yeah, and again, when I think about this one, it's something that's I think everyone says, well, that's been around for a long time, but I think what's been automated predominantly up until today are simple recurring types of journal entries, right? Ones that are auto reversing, right? So maybe I even get to count those as two instead of one, right? But the ones we're going to see going forward are going to provide intelligence, insight. So it's not just going to be the static updates or constant automation with the same even chart of accounts, same accounts. It could be recommending that we enter the journal entry a different way, and it's certainly going to be giving us guidance and insight into what the figures should be. And also the great value of analyzing. You've been doing these certain automated journal entries a certain way. There's an opportunity to do them a different way. Obviously,
True.
that is a feed into. So I'll stop there. Get your reaction to the thought around journal
Yeah,
entries.
yeah. I mean, I completely agree with you, and not just for saying it, right? I mean, one of the aspects that we had to automate for one of our customers is on lease accounting, right? It's pretty data intensive. Prepayments or prepaid expense accounting has always been there for eons together, like you rightly said. But lease accounting in terms of rights of use asset or ROU liabilities and carrying out unwinding related calculations, and those are largely data driven, right? So customers are asking for those kind of slightly more complex accounting entries to also kind of be automated and the outcome of any automation should result in those entries getting posted in ERPs as well, right? So yes, the use cases in the journal entry automation space are getting more and more and more complex because the tech stacks have become more capable to tackle them, and hence we can take on more complex problems as well. So the header might be generic, but the use cases are a lot more complex than what it was a couple of years back, is something which I can definitely tell you from our experience.
So another area that we looked at is cost allocation, the scenario modeling. And again, you think hand in hand. I didn't mention my experience in my earlier career, but I started my career with AT&T in the finance organization. So I was part of the wonderful monthly book close activities. And then also we were required to have a fully allocated results at the end of each month. So everything had to be fully allocated to whether it's products, cost centers, etc. So that was a painful exercise as well. When right after you get through one painful exercise of the close process, you also had to make sure it was fully allocated. And evaluating how we were doing that was always a challenge. So the opportunity to have tools that are going to guide you with the modeling around that. And again, the tools today are not just, they're evaluating how you're doing it, which is powerful. That's really the interesting thing about Gen AI. I mean, even the examples that I'm hearing about from a coding perspective is that it's looking at how code is being created and saying, okay, I understand you want to have this result and you just wrote 20 lines of code. You can actually do it with 10. That's interesting. So it's not just enabling you to do the work, but it's also evaluating how you're doing the work. And that's what I see the opportunity here with the cost allocations and looking at how you're modeling and where can you do it better.
True. And especially in scenarios where companies which are using the standard costing model for either valuing inventory or, either looking at their segment-wise profitability, right? And then kind of tracking what actually happens and trying to update benchmarks, etc. Or the parameters, the parameters for cost allocation in itself could be more dynamic, can be more dynamically handled as well. And yes, AI can probably, carry out a much more efficient job based on the dynamism part. So I think those are areas which are quite interesting use cases where one particular, use case that we've seen is especially on inventory valuation for manufacturing and trading kind of companies, where they follow standard costing. Updating benchmarks or updating the standard cost is always a challenge, and it is a fairly cumbersome exercise. So, looking at that as a use case is something which they've started experimenting with to see how the standard costs can be more dynamic and more real time rather than falling behind and having to analyze variances in a detailed manner. So I think, yes, definitely that's something which will be of tremendous value, even from a margin perspective on the businesses that, that are being run where the margins are fairly competitive.
So external reporting, those pathfinders are expecting to be able to release their reports faster. Of course, they're expecting process improvement, process cost reduction in this space as well. And speed is important, but accuracy is equally important. So no one wants to have to make any updates to external filings, external reports. So speed is going to be expected to increase and improve. And of course, the accuracy as well. The other one on here is narrative creation. So again, this is an area where we're going to see, and organizations are already seeing that the technology is a great benefit. And again, as simple as thinking about, when you're on a call today, note taking. I'm the first to raise my hand to say I've always been an average note taker. I love the fact that we're using different tools to take the notes, provide the transcript, but then more important, the summary, the action items, the key findings. So think about, that example, and you're applying it to doing the narratives and the findings in your financial results for the end of the month. That's a game changer right there.
Yeah, and I'll take you from that, right? In the variance analysis application that we deployed for one of our customers, the main issue that auditors had there was that the quality of the narrative coming from the finance teams, especially disaggregated finance teams sitting in different geographies, the quality of narratives was a challenge because it may not necessarily be in COSO compliant controls language, right? So just using a model to convert those insights contributed by the finance team members into COSO compliant language, enhancing quality, enhancing the narrative, in itself is a value creation process, right? Because that's something which significantly enhances how CFOs look at their insights, how auditors look at the process of how how management of large enterprises are tracking, monitoring all of their critical variances. So that's a classic use case that you said, right? How the transcription works for us personally, how narrative creations, especially in controlled compliant language, can really add value in the whole process, not only from a insight standpoint, but even from a SOX standpoint, right? It reduces deficiencies, reduces weaknesses that auditors typically find in that process in itself. Okay, so on this particular slide, Bryan, I'd just like to take a bit of a lead, right? Because what we're trying to articulate here is typically in an account to report process, how a controller or how a CFO's office looks at it. We try to broadly bucket that into three critical components or pillars, if I may say so. Obviously, one being the data source, which could be a combination of accounting ERPs, billing applications, payroll applications, reimbursements, any other finance applications that accounting teams might use. And what kind of a stack or what kind of a solution architecture that controllers are looking at, right? So that's broadly split into three layers or three pillars, if I may say so. One being workflows, which can allow agile orchestration of processes across the team in itself, maintaining and managing a team, orchestrating the team, ensuring jobs are not being lost in the cracks and gaps because of lack of communication, ensuring that tasks are not being lost in the process. So having a workflow module which can kind of help in that process. The next one is automation agents, where database routines like intercompany, bank reconciliation, prepayment accounting, lease accounting, revenue recognition with the help of AI agents. All of these are accounting related gap requirements, which can be fairly data intensive, which can run into volumes of data, especially if it's for, large to very large enterprises. So how can we bring automation layers there to kind of give the kind of, to give outcomes that either could be in the form of journal entries or it could be in the form of highlighting issues from an accounting standpoint or finding out the discrepancy between what's been passed in the ERP as an entry vis-a-vis what needs to have been passed, based on the outcomes given by these agents. And then, yes, the account reconciliation part as well, in terms of How can we have, an applications constantly monitoring, the trial balance numbers vis-a-vis the underlying, subschedules or schedules that are coming in from the ERP or which are being manually maintained by the finance teams? How can they always sync and tango with each other fairly well? More often than not, close falls apart because there's some account that's not tying out to what it needs to have tied out in the first place. So to ensure that those are highlighted and red flagged much ahead in advance, rather than on the day we are going to have to send out the reports, finding it out is obviously going to be a big pain in the neck. So I think this is the broad solution architecture that we're seeing. Our controllers, CFOs, our customers, or potential customers looking at, even whether it's a point solution that they might have a specific problem for, or if it's an overall solution architecture in itself. I think a combination of workflows, automation, and account reconciliations, monitoring of them, and red flagging of them. I think these are the kind of uh, components and pillars that they typically look at from a solution, from a record to report or account to report kind of process in itself. At this stage, Bryan, if you don't mind, I'll just probably quickly run one more poll. It's a very interesting poll in terms of which of these technologies are finance teams using or planning to adopt in 2025, right? I know AI is, is the key word, or is the word which is probably viral right now, especially with DeepSeek coming into the market in the last 1 week or so and creating ruptures, especially in the AI world. But yeah, it'd be interesting to see what outlook are the participants or our controllers and CFOs in this webinar looking at from a technology standpoint. Cool. I think fairly interesting insights that are coming through. It's going to take a while for me to consume this, but yeah, it looks very interesting.
Just reflecting on that last slide you shared, I mean, those activities and those outcomes, um, they're all equally valuable. So I mean, they're all items that I expect that finance leaders and CFOs say, yes, we're focused on these outcomes, and these activities are critical to our process.
This one is this slide. In this slide, we are trying to just kind of articulate how we are approaching this whole process and how AI is kind of slowly becoming pervasive in each of these solutions. Whether it's data collection and integration, trying to see how we can use ML routines or predictive AI routines to check the integrity of data. It could be based on type, etc. And that itself, I mean, in a sense, for any process to work, you need input data, you need certain outcomes to run on it, and you need certain routines to run on it, and then you have output data, right, in terms of insights, etc. So data collection integration focuses more on how capturing data can be made more efficient, more accurate, more complete, so that what comes through from the source is largely accurate. And the next one is transaction matching in the account reports process that we've already kind of highlighted upon in the various slides in the past. Journal entries, AI suggested journal entries, especially from a control standpoint, looking at anomalies or looking at journal entries which are not probably following a certain behavioral pattern. I think AI plays a very good job in pulling out those anomalies and pushing it to controllers for their review in itself, especially at the time of reporting. Finance close in terms of an account reconciliation process, how we can use AI agents to prepare balance sheet summaries, reporting summaries, typically which gives a synopsis of a particular month's performance in financial numbers with narratives that could either come in from variance analysis modules, or it can be narratives which which it could be a combination of model, which is a model-based narrative, which users can review and then kind of give controllers and CFOs a sense as well too. So that's an area which is picking up in the heat map, especially from our perspective in terms of development standpoint. Variance analysis, we've already kind of imbibed AI models for generating commentary, but we are still being careful. It's in beta stage. We're trying to ensure that those models are not throwing hallucinations. So we're now figuring out how that can be made more accurate, especially especially when we bring it down to an AI agent kind of a tech model in itself per se. And the last but not the least, risk management. One of the critical hurdles that we have had in any of our customers when they adopt a solution is most of these applications or processes are in scope as far as controls are concerned, SOX is concerned, or any regulatory requirement on internal controls over financial reporting. Risk management plays a huge role there. So what documentation is in place, how are audit trails being captured. There are some countries which are going one step further and asking auditors to even report on audit trails, etc. So control environment and governance layer is also becoming extremely critical, and finance teams are critically aware. Private equity investment firms or investees are also in portfolio companies are also kicking up a gear in this particular angle as well. So even though it comes in the last, as far as this presentation is concerned, trust me, when we are having conversations with CFOs on solutions, 9 out of 10 times you're asked the question, hey, will it satisfy my control requirements? Will my auditors have a problem with it? Do you guys have audit trails? Do you have all of those necessary features in your application to demonstrate that we've done everything as intended? So that's an area and pillar which is also kind of picking up importance from a criticality standpoint, the way we see it. So this slide is basically essentially to act like a step back kind of a slide, right? We've gone through a lot of surveys and research studies that Hackett has done, observations that Bryan has kind of beautifully articulated in the previous slides. So what we wanted to do here was just to kind of have a check-in slide, right? Just to take a step back and look at and just bring this to context. So while AI-driven solutions do promise a very, very bright and an accurate future, if I may say so, how are CFOs looking to tools to solve the problems from an end-to-end perspective? So I think what we noticed here is controllers and CFOs, apart from looking at applications, are now more focused on outcomes. So which means if an application or if a technology stack delivers an outcome, say, which takes them to 80% of what they eventually want, what they are more interested in seeing is that how can we bridge that balance 20% to ensure that they're experiencing the complete solution right now, whether it's for aspects like, how can they streamline orchestration within the team, or how they're seeing value which is shifting just from deployment to usage. Critically, I mean, this typical example in the second part is where customers buy applications, but users in the finance organization may not necessarily have adopted it, right? So which means you're not getting the kind of utility value that you had perceived when you made the purchase decision. So the focus is shifting from not just acquiring applications or solutions, but to ensure how they're seamlessly deployed. Large enterprises have their own problems in terms of having enormous amount of capability and automation, but not necessarily giving the kind of results, because the orchestration of those outcomes, who's reviewing those outcomes, how are they being passed on for appropriate remediations. I think those are aspects which people are still grappling with. So for CFOs and controllers to look at the end outcome of saying, hey, am I compliant with my SOX requirements? Am I compliant with my reporting requirements? For them to look at that, just a technology solution may not suffice in some places. So looking at how we can bridge that gap effectively to deliver the outcome is what we are getting to understand, even though the fulcrum of it might be a technology application, but ultimately the outcome is what the controllers and CFOs are really looking at from their perspective. So Bryan, any thoughts that you have in terms of various conversations you might have had in terms of how people are looking at this juncture?
Well, you're spot on with where you're seeing the gaps are, and some of these are timeless, right? The communication breakdown that needs to be focused on. Again, technology doesn't solve everything, right? So when you're looking at how to improve your process, it has to be holistic. You need to be looking at the process to procedures. Not everything is going to be technology driven. So you definitely have to look at it from that perspective. Again, finance teams, they want to work to deliver complete outcomes. On your previous slide, it summarized it perfectly. Everyone wants to be fast and accurate, right? So you have to balance that, right? You can't just say we're going to reduce our close time arbitrarily. The reduction in your close time is going to be an outcome, a result of changes you make to the process, procedures, the technology that you employ and implement. The result of that is going to be, hey, we made these changes, and the result is we've moved our close from 10 days to 5. So you got to make sure that you're setting the proper expectations. And that's actually on a slide that I have that we talk about when we close here, is level set your expectations. We don't have to jump to that yet, but I think that's super important as we come to the conclusion here.
True. So in that context, the solution architecture, like we said, it might be a little repetitive in terms of what we've spoken ahead in terms of what organization. So, classifying the problem from a hierarchical perspective, right? Whether it's at an organization level or at an account balance level or at a transactional level, and trying to see where the blockers are, where the bottlenecks are, and each of these have their own typical problems. Organizational level could be more strategic in nature. Balance level could be more in checks and balances that are there in place to make the system foolproof, and transactional could be just, or kind of carrying out routines and the underlying data in itself. So I think all of that is one, those that's also one perspective, a prism perspective, if you may call it. Looking at different levels and trying to see how we can look at that particular account to report process in itself in the first place. Some of the experiences that we've had in some of the customers that we've kind of worked with is trying to see how we've been able to reduce the close cycles, increase accuracy, and also streamline variance as analysis of process, especially for a large enterprise customer. Are some of the experiences that we've shared jointly with our customers in this process. Bryan, I did notice that there are a few questions that have come through as well.
Yeah.
I think we can probably pick some of those. One of the questions probably which you might want to take, Bryan, is what are the key challenges finance teams might face when integrating AI into their processes or workflows per se? I'm kind of combining a couple of questions and asking this question. So if you can kind of throw some challenges that teams might face in integrating AI into their processes in itself in the first place.
Well, I think the one that I'll put on top of the list is for all processes and certainly applicable to account to report is making sure you have enough content and data in the use case that you're looking to leverage the tool for. If you don't have enough data or examples to put into the pilot, you mentioned earlier about hallucinations. You may get false positives in terms of, hey, it's working, and it's really not because it needs more data. I know another one of the questions here was asking, are any organizations using AI to automate your journal entries? And the answer is certainly yes, they are. That would probably be a good place to start because I suspect all organizations have more than their share of journal entries. Okay. So, in terms of concerns and where to start, don't boil the ocean. Pick just one or two, one at most, but definitely pick one where you've got a lot of data because that's going to feed the engine and give you good results. If you pick one with just, anecdotal information that you think would get better, you may get disappointed and you want to avoid that.
Sure. One other question that's come through is how can tools help in improving compliance and reducing errors in financial reporting? I think all of the toolbox or the tool stack that Hackett and Bryan had Hackett had identified and Bryan had articulated will definitely help in both of those in terms of ensuring compliance with the processes and reducing errors in itself. I think one other interesting question.
Yeah, I'm looking at them too. I mean, the question around how can I ensure data accuracy and integrity? You're going to have to take the same approach that I think we're all taking right now with the note-taking example that I provided. When a meeting is concluded, everyone in the meeting receives a transcript and a summary. We're still saying, hey, let's look at this. Take a look, make sure it was accurate. Did Bryan really say that, or maybe it was misinterpreted? So until you get comfortable with the tool, that's going to be a key step before you let it. I mean, you're going to be and I don't want to use another organization's term, but it's a classic. I mean, you're going to be in co-pilot mode until you can go to autopilot mode. Okay.
True. Just one interesting question that came our way is in terms of one of the participants having used Flowcast in terms of deploying AI. I mean, how are we different? Two things. One is we're trying to see how we can make the entire account report more a seamless and user-friendly experience in terms of coupling reconciliations with tasks and looking at tasks and reconciliation in tandem rather than as standalone silo models. One of the other aspects that we are working with very closely is on a beta stage is how we can use conversational agents for users to execute their tasks in the close rather than them having to come into an application and use the click-based model in itself in the first place. So these are two interesting aspects that we are working on and hoping, for us to be able to kind of deliver these offerings to our customers and users as well. So I'll just come back to the presentation. Probably we're in the fag end of it. We just overshot by a couple of minutes given that we started late. But I guess, Bryan, I'll leave it to you to kind of sum up what you have in terms of thoughts, and then I can take it from there as well.
Yeah, for everyone who's listening in today, wherever you are in the journey, I think all these 5 steps may apply to you. If you're just starting out, so if you're in that follower category, start with number one, get educated, start to learn what the opportunities are. Look for use cases. Use cases are out there. If you're talking to software solutions like Consarc, ask them, give me some example of use cases that you're implementing now. Or come to organizations like the Hackett Group or others that are gathering insights in this space. There are use cases for you to evaluate. Lots of information are out there. Use one of the free AI tools to ask them, give me some use cases. You'll find them out there. So certainly look at that. And as I mentioned, don't boil the ocean. Pick a few that you want to target on and focus on. Level set your expectations, and then set your roadmap. Data is critical. So assess that data quality, skills, and find some champions on your team who are excited about this. They're going to be the best team members to really embrace this and then help you get the full advantage.
True. I think I can't agree more. Like you rightly said, just as far as AI models are concerned, I think you just have to go and hit the model hard and just ask questions, converse with the models. Funnily, these models are developed and become better based on conversations. So the more you converse and the more you interact yourself, you'll get a very good idea of where all technologies or the kind of tools that can be used for the kind of problem statement. So feel free to start interacting with the model. In terms of what opportunities or what ideas it throws, models do get creative. So be a bit wary of creativity. It doesn't lend itself into hallucinations. But as long as you're skeptic, and as accountants, I think we're trained to be skeptic, right? We don't have a choice. So as long as we are skeptic, I think we can still make good use of the kind of ideas and opportunities that are coming across in this space. And yes, I would like to kind of, quote from my personal experience that we have no choice but to embrace technology. The question is how, when, and how, and how do we plan for it? I guess that's all it comes down to. And I don't think, and I think this is more of an opportunity for us to really, as accountants, for once, put our hands up and go up the value chain from a business perspective. So I think you see CFOs turning into CEOs, finance controllers turning into business finance teams. And I think all of these trends are happening a lot across enterprises. So I think the world is out there for finance professionals to grab, especially from a business perspective. And using these tool stacks and these methodologies are really going to help us go up in the value chain significantly. So I'm definitely excited, as bullish as it might be. But yeah, that's pretty much the kind of mindset that I want to leave everyone with. So thank you all for attending this webinar. I hope this was useful to you, and really hope that you could get some insights. And if anyone wants to reach out to either Hackett or Consarc, we will share our credentials, and you can kind of do so as well. So expecting to see some of those conversations going forward as well. So thanks a lot, Bryan. It was interesting interacting with you, and it was fun as well doing this presentation. So hoping to kind of carry on such seminars going forward as well. Yeah, thank you.
Yes, I enjoyed it. Thank you.
Thank you. Bye.